we discussed in the concepts of marginal costing that for a company, the total cost we can segregate into two parts. One is the variable cost, second one is the fixed cost, right? There is of course there is another category which is mix of those, which is called semi-variable cost, right? Which is partly fixed, partly variable. But broadly, almost all the costs we can divide into two categories. One is the variable cost, other one is the fixed cost. Now, the behavior of this variable cost and the fixed cost, it is a little different. So the variable costs, they usually what happens, they change with the change in level of production, right? But fixed cost, the total fixed cost doesn't change with the change in level of production within a given time range and within a given production range. In the long run, of course, all fixed costs becomes variable. The total variable cost, though it changes with the change in the level of production, but the variable cost per unit, that remains fixed, right? And total fixed cost, though remains same within a given production range and time frame, but the fixed cost per unit changes when the level of production changes. So if the level of production increases, the fixed cost per unit decreases, and vice versa. Now, these characteristics the companies use for many decision-making purposes.